Happy New Year. Welcome to our first long form video of 2026. Thanks for joining us. This is a long video. It's over a half hour and it's really a straightforward premise. We've had a ton of new people find Option Omega. They may be new to options backtesting, new to options automation, and this video answers a simple question, which is, can I build a strategy, a backtest, and trade it live? And how close will your automation tool be to the backtest that I made? So join us as we answer that question in this video. Welcome to 2026. It's going to be a great year. Thanks. All right, we're going to do something we have never done before and probably should have well before now. We're going to take this backtest and create an automated strategy, and then we're going to monitor, update how the strategy does. So it's the middle of October now, and it's a Wednesday when I'm making this. So this strategy is from the OO show back in May. We did a video. If you don't know, the OO show is our daily morning YouTube show at 8:30 market time. It is on our YouTube channel and it is totally free. We chop up backtests every day. Check it out. Let's update it to recent. And we're going to run it through today. The other thing I'm going to do is I'm going to trade this on a lower cost brokerage. I'm going to automate it, and the fees and commissions are closer to 15 cents. I am going to bump up the slippage to 3 cents on both the entry and the exit. And these dates down here are holiday dates. So we'll want to update that as well, which we can do that either in the backtest or the automation platform, because I'm not looking to trade this during short holiday weeks. Okay. And here we go. As you can see, it's had a good, pretty good year. It's been flat for a while, and I'm guessing it probably got delta'd out again this week as a trend here. Now let's see. Is there anything else I want to do to this? Because right now, all it has is a leg delta exit. I don't know. I haven't done any additional backtesting. I like this version. And let's look at the losers and see if we get some really bad tent sags on the losers. And so to do that, let's just look at the time exits first and see if there's any like super bad, because it's a 1-3. You can have a 10 seg with anything. Some of these are pretty low, short, long ratios. Geez. And it also should be noted the opening short, long ratio is about, maybe I'll try like a 0.05 on exit. Let's try that. So we'll do a 0.05. And I am just going to trade this at a one lot. And what we're going to do every week is we're going to compare the backtest to the automation platform and see how it does. So I think that made it a little bit worse. 6.3 capture rate. Here's 7.1, 6.3. Yeah, let's try a maybe a little bit lower even. I mean, that's pretty low, but we'll go to 0.03. Just use a round number and see if this does anything for the backtest. Okay. Not really. Not much. I guess 0.02. I mean, it's probably not going to get there. But I don't mind having a rail on for that. 7.1. I think that's about the same as I started out with, isn't it? It actually increases it. Here's the no backtest. It increases it. I mean, I guess I could do 0.01. I don't know that it's ever going to get there. I like having a 10 sag condition just fundamentally on calendars, on double calendars. I think this is the best. It's very similar to what we start out with, 2.9. Yeah, I don't think this is ever, I don't think there's any difference here. I don't think it ever gets there. All right, let's look at one other thing. Are there any conditions? Let's look at the losers. Are there any times where we definitely had profit? That's a fake print. No. See, this is why you want to have two hits on these. Now this time was probably either at the beginning. Okay, so this is a real number, but it's noisy and you probably wouldn't have gotten filled. Is it 10 o'clock? So is it news? This is why I always avoid backtesting at 10 o'clock, 2 o'clock, 2:30, 3:50. I avoid those times because of these. So this is what the market printed. Like, I call it a fake number. It's what the market printed, but you probably wouldn't have gotten filled at that. And that's okay, because we don't have a profit target on this one at all. I'm trying to see some of these losers, what happened on these losers. I'm guessing this is probably another 10 o'clock newsprint. Sure is. The thing about this backtest is that you still win more than you lose, or your losers are smaller than your winners. So that's a good setup. We got 3 cents. I think I'm just toying. Do I want to add, like, are there times when it makes sense to do a profit target? We'll just try 2 different profit targets. So I'm going to do 2 hits, cap the profits, and we've got 3 cents exit slippage. So to hit that profit target, it's going to have to get 3 cents past. Makes it worse, as I thought it would, because you really just want this thing to cook. You want it to get to the strike and cook. You want it to end as close as day possible near the strike. You know, if you're in a situation where you're in a high vol environment and then it ramps down towards the end, that's probably like your picture perfect scenario for this kind of backtest. And right now I'm looking at the win percentage. It's not really changing. And I'm just going to try a couple more of these. But I think what I'm going to do, I think I'm going to actually leave this really close to the backtest that we had on this show. Let's try one more. We'll do, let's do 35%. And I think this is probably going to continue to make it worse. My guess is this winner will be up a little bit more, but it's still just not as good. So I think we're just going to keep this version. So this version is what I originally started with, a 2:30 exit on the day of. So it's every Wednesday morning you're getting in a 2:30 exit. You exit the time, and then you have deltas as well. And we've got 3 cents both entry and exit slippage. We're just going to do a 1 lot on the Qs. The blackout days are holidays, so I want to add those. So for now, we're going to save this as the OO show May 25 13 DC. And we're going to do this in 1 lots, and we're going to save it. Boom. Let's automate this. All right. I am in my automation account. This is going to be super easy. We're going to click is active. We created the strategy. We're going to do it in this account that I have selected here. And then the only thing I really need to do, we're going to do a 1 lot. And we are going to tweak on this condition a little bit. I'm going to do entry execution of 1 cent, both for entry and exit. I'm going to give it 3 minutes to enter on the entry window. That's what the entry window does. And let's see these times. Let's slow it down. Here's what we'll do. I'm going to add a cent offset, which is basically baking in a cent slippage, which is not insignificant. Okay, that's not insignificant. But we have 3 cent slippage on the backtest. I'm okay with that. This will help us maybe get a fill. And then what I'm going to do for the exits is I'm going to do a little more relaxed exit. So I'm going to give it 9 seconds. And then I'm going to add 2 different conditions. I'm going to do above delta and below delta. So I'm going to do below delta and above delta. And I'm going to do 1 cent increments, but I'm going to speed these up a little bit. So for the above delta, I'm going to exit this a little more aggressively with a no offset, but I'm going to exit it every 4 seconds. And for this one, I'm going to do it every 6 seconds on below delta. So the normal exit is only going to apply to the time. And then below delta will follow one condition and above delta another. I'm going to save this, and this thing will be ready, and we will follow up, and we will see how it does versus the backtest. We'll compare their strikes, compare the execution, just one contract. And I think the only thing we have on the to-do list, and we can actually edit, have a note here, need to add holiday blackout dates. Okay, so I'm going to add those. And I can do that on the first holiday that's coming up, which will probably be Thanksgiving, because I'm not going to want to trade it Thanksgiving week. And on another thing I need to do, let me just check. I've got exact DTE clicked, which is fine. I probably want to make these exact strike offset while I'm here. And that will make sure it's a calendar rather than a diagonal. I'd be okay with a diagonal, but let's just do that. I think it should not have much of a problem finding those. So what I was saying, it probably won't trade on Thanksgiving because Thanksgiving's always on a Thursday. Actually, it might. I think it might, but we're going to skip that week, which we can add those blackout dates at any time. So for right now, I think we're ready to go. Okay, week 1 is in the books. Let's take a look and see how close the backtest was, if it was similar to the automation or if there were variances. And we'll look at the backtest and let's run it for the last 30 days and we'll switch back. This is real money. We traded a one lot, entered at 935 and exited on a big, ugly Trump candle at 1131 for $3.12. So we exited for 260. We entered for 312, exited for 260. And we can look at the execution and see how that did. Looks like we had just a little bit of adjustment. Got filled right away. I think we had an offset in there and just a little bit of adjustment. So we'll see how close that is to our backtest. And they are identical. Yes, that is a good guess for the slippage on our first swing at it. So as you can see in the backtest, this trade actually hasn't done well lately. We're going to trade it for a few months and see how it does. But yeah, it looks like, I'm guessing we picked identical strikes, 607, 617. Yep. And well, there's not that much more to say since this no variation, match 100%. And it was a tough week for the trade. This was a rough vol environment going in. And the trade was pretty much always in a drawdown. And we did get out. There were some 1-3s that did a heck of a lot worse than this one. So I will take it. 17%. We will continue on for next week. All right. It's Tuesday at 12:30, just after 12:30. And we had a trade go on this morning. I thought I would just check in on it. And a couple things. Let's just look, and we're going to click the activity log and include the debug. And what this is going to do is it's going to bring up the history of the order. So it looks like it entered, it opened right on time, and it entered on the first attempt. Remember, I think we had an offset on this. So we'll check that against the backtest and see if our slippage and offset expectations are still good. I don't want to micromanage it. We only have 2 trades, but as I've also automated a lot on OO, so I have a comfort level with how those settings work. When I started, I checked every backtest against the automation platform. If I needed to make an adjustment to dial it in, I did. But what I want to show you right now is this modeling. So we're in the strategy page. Just a reminder, this will update every minute as the platform checks. So here in the next minute, if the price changes, you'll see an update. But what we also have is this right here. If you click View Trade Chart, that's going to bring up a model. And this model is showing a lot of valuable stuff. One thing, this model, you can see the trade actually just updated in the background. This model updates more frequently. So this is not the automation platform. This is the modeling, but it'll update every, less than every 10 seconds it'll update. So if you watch it here, you'll see the price and you'll see the chart and you'll see everything refresh. But what I wanted to look at is where we are with this trade. And here's the thing, we're actually not in bad shape. The trade only is on for one more day and we want to be range bound, right? So we want to stay between 625 and 640-ish on the Qs. And if we just play it through time, what's nice is that the volatility structure is not really working against us right now. Now this is a DC and those things change. So that can change at any time. But the volatility structure right now is working to where if we didn't have a change in the volatility or the delta, we'd be fine. You know, we have plenty of room. Now, what we can do is we can look at the IV by days, and here's what you see that's interesting. We have tomorrow FOMC, and the volatility structures for both days are almost identical. Let's just model out a couple hypotheticals. Let's just say we don't have a lot of delta movement, but FOMC kind of does what people expect, and the vol collapses. Well, if both vols collapse, but the 3-day IV holds a little bit of juice because we still have 2 days in the future, that'll be fine, right? We can reset this and play with them. If both of the vols increase, right, then we also have more green coming up. You can model an infinite number of scenarios. You can expand the range if you want to look at it on a longer range or dial it in. But basically, we're not in bad shape right now. We still have a little bit of room to the bottom. And as we go on in time, remember, we're less scared of the bottom as we go on in time. So the put side, as we go on, get closer and closer to expiration. I can't remember exactly when this trade comes off. I can look here in a minute. But if we took it off later in the day, you know, we'd be right in this profit zone anywhere. It still can go below the put. Again, these things are complicated. There's a lot going on with a double calendar structure. It's not a basic trade structure. It's a more advanced structure. And this modeling tool is super interesting. It will help you watch it. If you want to develop a bad habit of sitting and watching your trade all day, you can do that too. This thing refreshes every couple seconds. I think that's a bad habit to sit and watch the prices. But if you want to, you could. More useful is the tool playing with the time, playing with the range, but most importantly, the deltas and the vol. You can see we've got Greeks down here at the bottom. If we want to add some onto the chart, if we wanted to add delta, probably the most useful. We can add some theta. We can even, I mean, you can go nuts with this. And if you want to make some really cool complex 3D structures, you can do that too. So let's take some of these Greeks off. We'll just look at delta, and we'll get rid of rho as well. Poor rho. So there's our delta model, 3D. And yeah, it's not looking bad right now. I find personally that the modeling for calendars is a lot more useful once the trade goes on. If you model a calendar at the outset and choose based on a model rather than a backtest, that can be difficult. So what's ideal is to have the ability to do both. So a backtest that you trust, and then forward test and live test and model it and see how it does. So I rambled for a little bit, but we'll check back probably, I don't know, maybe tomorrow, but maybe Thursday when this thing is closed. And again, what we're worried about right now, it's up 6%. No big deal, but it just went on 3 hours ago. And we are set to go off at 2:30. Now, one thing I am going to do is I'm going to change this to go off. Now that I'm looking at it, I'm going to go to edit exit conditions. I'm going to change this trade to go off at 229. And the reason I'm going to do that is it didn't change the strategy, if you notice, but it did change this trade. The reason I'm going to do that, and actually I can even let's do it a couple minutes early, 227. The reason I'm doing that is tomorrow is the FOMC, and there's usually a big blip at 2 o'clock when the minutes actually get released. And then when they start talking, which is typically at 2:30, there can be movement. And so I'm just going to get out a couple minutes before. It shouldn't meaningfully change things. And actually, now that I'm thinking about it, we'll go back and revisit the backtest and tweak the backtest so it's not getting out right at 2:30. Because as a general rule of thumb, I typically don't like to get out or into a trade at 10 o'clock, 2 o'clock, 2:30, or either of the MOCs, because those can be blippy. It's not that the data is wrong. That's what the data shows. But those minutes, because you have news, that you can have some blippiness. So for a smoother landing, we're just going to get out a couple minutes early. And it'll be a homework project for us in the future. We'll go back, do the back test, and run it just a couple minutes before, and then we'll adjust the strategy at that time. But you saw me use a model, and you saw me make an easy adjustment. And the trade is just doing its thing. We'll check back in. Okay, we're gonna do something I don't always do, which I'm still in the second trade. We had the video yesterday. We're up a good amount. We're up 44% today. And you can see Not only that, we're in a really good spot as far as the Greeks go with this trade. Today is FOMC. It's going to come off before the press conference. So if we just extend it out to the time, you'll see it'll be quite nice. If we move, it will also be quite nice. You know, as time goes on, we have a big profit tent here, we have a big profit tent here, and we're in good shape. So what I'm going to do is, a lot of times when I started backtesting, people would ask me, do you manage your trades? Do you ever not follow the backtest? So we've got this backtest here. And what I'm going to do is I'm going to run it uncapped, and I'm going to run it through today. And I'm going to make it 10%. I'm going to change these values, and I'm going to explain why I'm doing this. So we're going to do 100K, 10% allocation, run it. It should just take a minute. And what I'm going to do is I'm going to level set with this backtest, which is an uncapped backtest. And that's going to let me really see the drawdowns. And then I'm going to run it taking a profit target. And we're at, what are we at? 44%. Okay. So here's our basic backtest. Let's run this with we'll just run it with a 40% profit target. We want to have some punishers. So we want 2 hits and we want cap profits. Is this going to make the backtest worse or better? That's my question. If I take a 40% profit target. So I don't usually even think about doing this, but we're up a lot, you know, and is that enough to evaluate it? Well, if you add a 40% profit target, it changes your capture rate a little bit. Doesn't change your win rate at all, but it does change your capture rate. And you can even see this year, here was a trade right here. I'm just looking at it. It makes it worse to have a profit target of 40%. Let's add a 50% profit target. We'll try that. And if a 50% profit target makes it better, I'm fine putting a 50% profit target on this live trade and also adding it to our backtest. It does not make it better. We'll try, I don't think it's ever gotten to 75%, but we'll try 75%. And our original MAR from the level set test was 3.7. So basically, here's our original MAR with 40, well, here we go, 40%. No, this is the original one, 3.7 at 6.7%. It's exactly the same as the 75%. So I'm not gonna mess with it. I'm just gonna TTBT. We'll see how it goes. It's in a good spot now. The other thing we can do, let me just run this and we'll see how we did compared to the backtest on the entry. So the backtest got in for 326 at 625 and 639. And this got in at 328. Okay, so we beat the backtest at 625 and 639. So an exact match on strikes, and we beat the backtest by 2 cents. Now, we have some entry slippage, so we'll check it on exit and see how it did. Okay, we just logged another trade this past week in our 1-3. Not a great week as far as the trade went. It lost a little bit less than it gained the week before. It's our 3rd week. We're 1 for 3 on this trade. But what I'm most interested in is how close we are meeting our backtest assumptions, because long term, this has done pretty well. So we're at 614 on the put, 631 on the calls. Let's bring up a backtest. Let's just run that and see how close we got. And we were at 265 and 189, and we exited at 230. Okay, match. We beat it. I think, so the backtest got 3 cents worse on exit and 1 cent worse on entry. So overall 4 cents slippage to the live trade, which again, we have some slippage assumptions in here. It looks like every week we've either met or beat the backtest and slippage, and we've had an exact match on all 3 of the strikes. So we'll just keep going another week in the books. All right, let's get to it. It's Thursday afternoon, 2 o'clock. Market's dumping. I thought it'd be a good time to look at our backtest for this QQQ trade. And I just ran the last month here. Let's look and see how it did versus automation. So numbers, 616 and 628. We'll just go through one by one. I got the automation in another tab. 616, 628, check. The premium, 286 in the backtest. So we're looking for a lower premium than that or equal. Hey, check. Beat it by a penny. And then let's go back to the automation and the backtest. Okay, back in the backtest, 332 in the backtest. So we want automation to be 332 or higher. 334. So this is great. Let me pull the back test back up. So we've got 3 cents entry slippage and 3 cents exit slippage. I think we matched it maybe the first week. And I think all the rest of the time we're beating the back test. So I'm fine leaving it. What would be interesting is let's just run this the last 4 times, the back test. So we'll start it on the 21st. With a 1 lot of each and our actual fees and commissions, we are down $12 in the back test. We are up $5 in real life. So number one, that's close. Number two, if we matched the slippage, I bet it would match exactly. And this is what I'm looking for, right? The strikes have matched every single week, and our slippage is exactly how I want to set it up, which is the back test has a little bit more aggressive slippage than I'm seeing in real life, but is realistic. And so we're going to keep going here. We're at 4 weeks in. I'm going to take this to at least 6 weeks. Now, next week we'll trade it. The week after we will not. And the week after that we probably will. So I'm going to probably do at least 6 weeks. We may do longer. Let's just see how it goes. $5. Here we go. Okay, week 5. I had a video for this and I lost it or deleted it. So I'm coming to you from the future in December. We're looking at this November 18th. This is the actual live trade here. We picked 590 and 613. And if we go to the back test, 590 and 613. So exact match on the strikes. And the back test made $71, 473, $5.45. And the actual trade made 73. So a little bit of positive slippage, which again, my philosophy on this is I would prefer to put more slippage in the back test to punish it. And then when you have something like this, I want to be close. I don't want to make it insane, but I would rather err on the side of too much slippage than not enough. So exact match on the strikes. And it looks like we did, I actually manually exited this 1 minute earlier because there was news at 2:30. So that, you can argue that may have been a penny or two of slippage there. I'm not that worried about it. Within $2, exact match. Moving on to the next one. All right, I'm back. It is December 2nd, 1:23 in the afternoon currently. Last week we took off because it was Thanksgiving, and I don't have this down to trade on short holiday weeks. And so we're watching the trade right now. I've got it pulled up in the automation platform in the modeling tool. So it's going to update every 5 or so seconds, and we can look at the chart right now. See, it's actually in a pretty healthy spot with the vols. If we just expand this over time, we'd exit tomorrow at 2:30. Of course, the big problem that we could potentially have is a vol crush. Or if we had a ramp, obviously, if we move too fast to the upside or downside, but it is a little bit later in the day. So probably maybe the time I'd watch for that the most would be overnight. If we do move to the downside, what would probably happen is vol would increase. And so vol is our friend if it increases. It's negative if it decreases, and we can even get more granular. So really what we're looking for, you can see the relationship between the long-term, short-term vol. When I say long-term, short-term, I really just mean 1 DT and 3 DT is about the same right now. So if the 1 term gets lower, or the 3-day gets higher, or if they move in tandem, will be good. What we don't want to happen is that 3-day vol to collapse and the 1-day vol to elevate. So obviously, I have no idea how we're going to look in the future. We can look at the activity log and take a look at this bad boy and see that it did open. It tried to open at $2.53. And it actually took 7 attempts to open. So we had 5 cents of modification on entry, and a reminder, we're modifying every 5 seconds, and we had a starting offset already. So a little bit of an ugly fill. Let's see how that impacts the rest of the trade. Right now, it's up about 8%, and it's just chilling in the middle of the tent. And we've got about 2.5 hours left, so we will keep watching. Okay, I had a video at this point for the final follow-up on December 3rd and accidentally deleted it. So I'm actually recording this in the far future. We're going to look at this backtest. Here was the 1-3 on December 2nd. It ended up losing. If we look at the backtest, what happened is you can see it was actually in a really good spot. I actually toyed with taking it off discretionarily just to show the features. And I decided not to, no big deal. It ended up losing almost $1. And let's see, we're going to just check the strike selection. So we were at 615 and 627. And on December 2nd, it picked 615. So it picked the exact same strikes. 258 and 240 were what we actually got. 255 and 239. So this is one where there was actually a little bit of slippage, worse, kind of gnarly slippage actually. So something to keep an eye on the entry. But again, not insane, but definitely more than we've seen before. So that is the follow-up to December 2nd, which is our 6th time trading this. Okay, again, coming to you from the future. This will be the last time I come to you from the future. Tuesday, December 9th. This is the back test. As you can see, I just jumped back and forth. It picked 616 and 630, and it lost $29. And the actual test picked 616 and 630, same strikes as we've had every other week. It only lost $24. So again, our slippage is kind of working out exactly how we want. Now that we've got enough of a data set, I could probably lower that slippage down in the back test, but I'm fine with it. So we've got one more week. Let's see how week 8 did. Spoiler alert, it's already on the screen, but I have a video for it. Here we go. Okay, our last trade of the year, I think, for this one. This is week 8. The actual trade made 15.5% in the automation. It exited above Delta, which is a downside exit. You can see that the closing price of 602 is slightly below the puts, and it exited at 140. So not that long before expiration. If this had been able to hold on, it would have printed even harder. As it was, a small winner, not bad, 15%. I've run the back test. It did 15.4%, so almost identical. Looks like we're a penny better on the entry and 2 pennies worse on the exit. So overall, again, very close. Running this, we should check the strikes. Did we get the same strikes? 603 and 618. Yep, 603, 618. So again, 8 weeks in, we're at 100% parity between the back test and the automation. And not saying that's always going to be the case, but 100% parity in. And if we look at it, we have what I would consider reasonable, but on the conservative side of slippage. So if we just do this as a one lot, the back test shows making $50. We've made 84. Again, the reason for that, if you go back and add up these slippages, we had a couple 229 exits, maybe an exit, two early exits that I did just on FOMC days. But on the whole, 100% match and beating the back test. So that's how I try to set up back tests. I want them to be realistic, but conservative. And that's the goal. So I would say that it's going pretty well. And this trade hasn't been anything to write home about. 3.2% capture rate is not fantastic. It's matched the back test though. And let's just run this back test year to date and we'll look and see how it's done year to date. Because we're in kind of a longer period of just a little bit of chop here, nothing terrible. And actually, we're really close to being at the all-time high. I think probably still trailing what it was actually right before we started trading this. But we're, a trade away from being at the all-time high. So it's kind of chopped basically for the last 6 months. Again, if we run this on a longer time period since dailies, we will see that this has been a good back test. It's been a good strategy. This 1-3 DC has worked pretty well in the Qs for 3 years. And you do see these periods. I mean, this is a little bit longer flat period, but we've had some periods here from April. Let's see, this is 2023. We were a little over flat here for 4 months. Here's a long period here from the end of 23 to, 8 months. So kind of a flat period. So I look at that, if we run this in a log, this is still a pretty good smooth curve. It's been a good year for this thing. If we had traded it year to date, and remember, these are back tests, but as you can see, the live trade over 8 weeks has beat the back test, not insignificantly, but a little bit. Just trading a one lot on a 5,000 account has been a 16% CAGR with a one lot. So if you would have done something like this, on a more normal sized account, let's just say you were trading a $50,000 account and you were allocating, 1% of that would be $500 a trade. So let's say you were allocating 2% of this. This is just a for instance to show you kind of the power of options. That would have been allocating just 2% of your account would have gotten you a significant percentage of the same CAGR as the SPX. If you would have allocated more, say 8%, just as a for instance, SPX is up about 15% this year, but just with putting on that 8%, you would have significantly beat the SPX just putting on one strategy, one trade every week except with holidays. And again, 6.3, you can find better tests than that. But if you look at our live trades, again, we've had 100% parity between the backtest and the automation as far as strike selection and win rate. I am going to do the following. This is the end of the year. I do not want to trade this through the holidays. So the 16th was a holiday. So I'm going to put the 23rd in. And then I'm also going to put the 30th in. And then that will make sure that I'm blacking these out, that those dates, it does not go on the rest of the year. So we're finishing the year up $84 on this real money live trades, 100% parity with the backtest strike selection, slightly beating the backtest because of our conservative slippage in the backtest. So that's a wrap on 2025. We'll keep trading this bad boy next year.